Hi everyone, and welcome to the final video in our series on trading options. My name is Ryan Victorin, and today we're going to talk about how you can manage an options strategy after you've made a trade. It's so important to have a plan for the life of a contract anytime you buy or sell options. You don't want to just place a trade and forget about it. You need to monitor it over time and understand your potential exit strategies. Today, we're going to walk through the choices you can make before an options contract expires and on the expiration date itself. Let's start with managing an options strategy prior to expiration. With Fidelity's Options Summary tool, you can view your open trades and see options that are paired with stocks for covered calls or paired with cash for cash-covered puts. It's a streamlined way to keep track of all your options-related positions in one place. And of course, it's always a good idea to track how the price of the underlying investment is moving so you can see how the strategy is evolving. Before the expiration date, you have three choices for managing a trade. You can leave it alone, you can sell to close if you're the buyer, or buy to close if you're the seller. Or you can adjust your position. Now let's talk about when you'd choose one action over another. Leaving the strategy alone is self-explanatory. This approach is typically used when the trade is going in your favor. The price forecast you made for the underlying investment is proving correct so far, and you don't want to make any changes. The second choice, close the strategy, can be appropriate when the trade is working as you expected or when things aren't going your way. Maybe you were bullish on the underlying investment, but unexpected news has caused the price to decline, and it doesn't seem like just a short-term blip. The news is serious enough that you've changed your outlook, and now your original strategy doesn't match your new expectations. This could mean it's time to close the trade, which you can do by selling to close if you originally bought the option or buying to close if you sold the option. Traders may choose to close an options contract early to reduce their losses rather than waiting until the trade reaches its expiration date or maximum loss. But by doing that, they're also losing out on the option's remaining time value and giving up the opportunity for the trade to move back into profitable territory before expiration. On the other hand, you may choose to close a trade early for positive reasons, like you've already met your profit goal and want to lock in those gains. So, whether you're closing a trade early to limit losses or to lock in gains, both cases show why it's important to have a clear exit plan when you first go into an options strategy. There's a third choice for managing options strategies before expiration, and that's adjusting your trade by changing the expiration date, the strike price, or the position size. You might hear options traders use the term rolling to describe these adjustments. You can roll the expiration out to a later date or move it up. You can also roll your strike price up or down. Rolling an option is a way to close a prior contract and open a new one. This allows you to adjust your position through time and in response to the movement of the underlying investment. Rolling is also a common move for traders who repeatedly use the same strategy, allowing them to place similar trades over and over again while making any necessary adjustments to strike price or expiration dates based on market trends. When your strategy involves multiple contracts, you can also make adjustments by increasing or reducing the size of your position. Say you placed a trade and have seen some positive developments that support your original outlook. You may want to increase your position by adding more contracts. Or maybe you've made some gains on the strategy and you want to take some of those profits off the table. If you have several contracts, that's when you might close some of them and reduce your position. On the other hand, if the strategy isn't going in your favor, but you still believe in your original forecast, you could close some of your contracts to reduce the size of your position and lower the risk you've taken on. Now, there's another factor that anyone selling options has to be aware of and potentially anticipate before the contract expires. That's the chance for early assignment. As we've said in other videos, you get paid a premium to sell an option, but you take on the obligation to buy or sell the underlying investment. Stock options can be assigned to the seller at any time, which means you should be aware of circumstances that could increase the likelihood of an early assignment. The first scenario is when there's little or no time value left in the option. If the option has a lot of value, known as being deep in the money, the options owner may think there's little chance of earning more profits before it expires. That could increase the chances it will be assigned early. Another situation that can result in early assignment when you've sold a call is related to dividends. If there's an upcoming dividend payment for the underlying stock or ETF that's greater than the option's remaining time value, it's more likely to get assigned before the dividend date. So those are actions you can take before the expiration date. Now, let's look at what happens if you hold your options until expiration. You've got 3 possible outcomes as the expiration date approaches. You can close it, you can let it expire if it has no value, or if it has value, you can exercise it or take assignment. Closing the trade is the same process we talked about a few minutes ago. You can either sell to close your long contracts or buy to close your short contracts. You might do this when you're only interested in trading options and don't want to trade the underlying asset. And by closing the trade, you accept whatever gain or loss is on the table. Let's take a look at how you close a trade on Fidelity.com. Just go to the trade on your positions page and choose Sell to Close or Buy to Close. Now, if the option hasn't gained any value, you can choose to do nothing, just let it expire worthless. This is a possibility for both long and short strategies. If there's no value nearing expiration in an option you bought, then you're probably not interested in exercising it. And if there's no value nearing expiration in an option you sold, it's probably not going to be assigned to you. The third potential outcome is that the option has value before expiration, which is also known as being in the money. If you're the buyer of an option that's in the money, you can exercise it. If you haven't done so at expiration, Fidelity will actually exercise the in-the-money options for you automatically. If you're the seller of an option that's in the money, there's a strong possibility that it'll be assigned to you. And you have to fulfill your obligation to buy or sell the shares of the underlying investment. And once again, Fidelity will automatically exercise in-the-money options for buyers, which means that, as the seller, you'll be assigned the contract. So those are the key actions and choices to think about for managing options strategies. As you can see, you can optimize your strategy by closely following your trades and deciding if you want to make any adjustments or close the trade anytime before expiration. That's why it's so important to understand these scenarios and think about your potential exit strategy before you enter into an option trade. It can really make a difference for your short and long-term success. And that brings us to the end of this series on how to trade options. I've enjoyed walking you through the ins and outs of how options work, the different strategies you can use, and how to place and monitor your trades. I hope it's made you more confident about starting your own journey into trading options using different strategies. If you have any questions about options trading, please drop them in the comment section below and hit the subscribe button so you can get notifications for future videos. Thanks so much for watching.